Good morning, good evening, and good afternoon, everybody. Hope everybody is having a fantastic week. It is Thursday. You know that means it is time for High Probability Short Term Live with the one, the only Mike Wade. First up, we're going to be talking about a quick market review. We're going to talk about how the markets are actually at an all-time high, which is awesome, I think. I don't know. We'll let Mike tell us. Then we're going to go over the quick sniper portfolio, 16 straight wins, still at that 92% win rate. Then we're going to talk about a couple recent trades, Peloton, Cisco. We're going to talk about a current trade that we're going to be putting on today. I will let Mike share that one with you. Then we're going to go through some of your audience stocks, some of your questions, some of your we're going to go give you some answers to those questions. I already see some of y'all have some stocks in the chat. And I believe it is time for the one, the only, Mike Wade. How you doing, sir?
Hey, buddy. Good morning, man. How you doing?
I'm doing all right. Hanging in there.
Good. I see my light's not so good because I got the jungle behind me here. So
yeah, you have paradise behind you, so it's it's tough.
Yeah, I'm going to the States tomorrow. And we're going on a cruise with my community, and my community's going on a cruise to other parts of paradise. I'm leaving paradise.
And I said this earlier. So you're leaving paradise to go to pay someone to take you back to paradise on a boat.
Correct.
That makes sense.
Yeah, well, let's get started. We got a good trade to start the morning here. We got about 14 minutes before the market opens. And Ryan, you said exactly how I feel about the markets. Yeah, the markets are at all-time highs. Is that a good thing, or is it not? Of course, if you're bullish, it's a good thing. We like to see the stock market rise. And the last time we were together, I had drawn this line right here, which is right at 610. And I told you that, well, I'm not going to go bullish on the markets until we get a close above this all-time high resistance level, 610. Right here, this some people call these basing patterns, where you see a longer, that's about a month worth of resistance. The markets, the SPYs, by the way, I didn't tell you, but this is the SPYs, an ETF that tracks the S&P 500. So it's the 500 biggest companies in the United States, and it's a good sort of benchmark for how the overall market is performing. And I said, yeah, it looks like we might want to go higher, but I don't have to guess. I can wait for the markets to close, the SPYs to close above 610, which they did 2 days ago. That would have been Tuesday, and then yesterday on Wednesday, yet another all-time high. Now, suspicious for me was the volume is light down here. So you can see here. So the volume wasn't as high as I'd like to see. So I'm not quite trusting it yet. Indeed, the market is down a bit. Let's go right into CNBC and check. The futures on the S&P 500 are down by a 0.25 percentage point. That ain't no big deal. Nothing to worry about. But I'm just not 100% confident that the markets will continue higher from here. Now, I hope so. It's good for the general retail traders, those that are investing in the stock market. I like to see that. I'd like to see people succeed. But we have a very provocative president now in the United States. And you all know that tariffs and future tariffs are all over the news. And there's a lot of question around if these tariffs take place and if they are sustained, it can increase the costs of goods, thereby increasing the chances of inflation. So what it means is if the tariffs continue to take hold and are applied and levied in the future to other countries, then we can expect inflation not to drop and therefore maybe even rise, and therefore the Fed is less likely to cut interest rates. So that is not good news for company earnings, and that could very well spook the markets, and then we get a correction. So we got to watch for that in this environment. Indeed, as I point out, once Trump won the election here, I just haven't seen this kind of gappiness In the 25 years that I've been, well, actually the last Trump presidency, there was a lot of gapping. So there's a lot of surprise news sitting in the wings that could move the market sharply in either direction. And for that reason, and always you should be cautious, but certainly now be very cautious. So that's why, Ryan, I'm with you, man. I'm like, yeah, it looks like it, but I am not trusting it just yet. So let's just keep an eye on that. Now, fortunately, because we trade credit spreads, the name of the show is High Probability Short-Term Profits. It's a mouthful, but it's really about putting on trades that right out of the box oftentimes have probabilities of profit in the neighborhood of 90%. Now, we take less money for it, but we win a lot. And we are not immune to these kinds of gaps, but we're certainly more immune than if you buy calls, if you buy puts, if you buy stock, short stock, any traditional directional tool or strategy. You have more chance of losing than we do. So indeed, our performance, Ryan, let's throw that up there real quick here because we're doing really well. And you mentioned 16 straight wins. Now we've got 2 trades on we'll look at here in a minute, both of which look destined to come off this week. By tomorrow, that number should be 18. But we're operating, Ryan, you said it, 92% win rate. What does that mean? Well, 92 out of 100 trades have been winners. We've done 63 trades, 58 were for a gain, and only 5 were for a loss. You know, I'm excited about the 58 out of 63 trades as winners, but I'm even more excited that of those 63 trades, only 5 were losers. Dramatic pause. It's really important, and one of the trading adages, especially if you're new, to really get your hands around and to embrace and to put into your DNA is that this game is about risk management. And indeed, the adage I like is manage your risk and let the profits take care of themselves. Ideally, you do that with a systematic approach with distinct rules. That's exactly what the sniper system is. There's a guidebook we'll talk about here in a few minutes, and the guidebook will walk you through this process. So we're operating at about 11.24% profit with losses baked into the number. We're averaging 11.24% every 5 days. All right, we get on base with 11% on average, and we're in and we're out within 5 days. Now, your average position size can be $50, maybe more, depending on how much money you have in your account. But if you took $378, which has been our average risk per trade, and you would take that money, conceivably, you could invest that money, make 11% on it, and then do it again, and do it again, and do it again with the same money in the same month. So a lot of people are like, 11.24%, no big deal. Yeah, it is a big deal. If you can do it every week with the same money, it's a massive deal. Right, Ryan?
Yes, sir.
Yeah, man. Let's talk about we have 2 trades on that have not quite come off. And one of them is on Peloton. And we put on a bullish trade on Peloton. I'm in some software called Tom's Option Tools. It allows me to graphically depict my trades. Here's Peloton. And then that was on Valentine's Day. Here we are today. The trade has not yet come off yet. I was playing around with some numbers, but the trade is not off just yet. The slippage was a little wide. What's slippage? Well, slippage is the distance between the bid and the ask spread. Or you can see here it's 8 cents, 0 by 8. So that slippage is interfering with our ability to take the trade off for 10% of the original credit. But what do you think the chances are that Peloton will be above 750, which is right there, by tomorrow at 4 p.m. when this whole thing expires? It will expire worthless tomorrow as long as the stock stays above 7.5. Indeed, the statistical probability of profit is 100%. All right, so I'm going to give you a little tip here. Sometimes, because slippage widens on these things sometimes, they're not going to let you out of it for a penny. We sold for 10 cents. You want to buy it back for a penny. That's in the guidebook, which we'll talk about here in a few minutes. And sometimes they don't let you out. So what do? Well, when you get to 2 days to go, I'd say just let this expire. Let this expire, worthless, and then you don't have to pay commissions to close it down. So around Wednesday before expiration, if I'm not out of the trade because of slippage, then I turn off my GTC close order, and then I let it expire worthless, save a penny to buy it back, save commissions as well. So that one will add, it appears. Now, it is possible that Peloton tanks. That's possible, although not very likely. The other one that we just placed last week is right at, in fact, some of you may be out of this one already. We sold a 62-61 credit spread. We make money anywhere above there. Let me take you back to the day we entered because it got a little hairy. Sometimes what happens, we got filled in the morning on this one, and sometimes what happens is the stock opens up really high and then retraces. And even during the life of the trade, on the day we placed it, we were down in this trade quite a bit, like $54. We were down about 10% or so on the trade intraday. And again, we make money above this point here, and then the stock recovered and now is poised for profit. I would say this will probably come off today. We got 9 days left before Feb 28. Statistically, this trade has a 96.4% probability of profit. All right, well, that's our game, Ryan. We just rock and fire. Hey, Ryan, let's take a look at the guidebook. No, I tell you what, let's wait till the end. We've only got 3 minutes before the market opens. All right, Ryan, let's talk about Shake Shack.
Let's do it.
Every time we were talking earlier, man, every time I see Shake Shack, the B-52s pop in my head. Love Shack.
That's what I think whenever I see Love Sack, like the that company.
Oh yeah, Love Sack too. Yeah.
Yeah.
Love Sack, baby.
Yeah, exactly.
Yeah, and the B-52s are from your area of the world, right? In South Carolina.
Oh yeah.
Yeah, man. Yeah, I love that song. I played it this morning. So that song is running through my head as I take a look at this stock here. So it's a fast food chain. I've never eaten at Shake Shack, but people that tell me that they've eaten there love it. Apparently, it's a really cool burger restaurant. Have you ever eaten there, Ryan?
I have not. I don't think we have any of those down here. We just got a Whataburger, so that was pretty cool. But never Shake Shack.
Whataburgers are good too, man. All right. Anyway, so they're up 10% pre-market. They posted stronger than expected quarterly earnings, and their revenue rose 14.8% year over year. That's good. They've opened 19 new company-operated locations and 9 new licensed shacks during the quarter. So they're growing. They fell short of raising future guidance, but and I call it a bifecta. I like to see beat on earnings, lifted guidance, and even better than that, and that's really good, but even better than that is they missed their expectations. So they missed on earnings and lowered future guidance. Imagine an anchor around that stock's neck. It's very unusual for a stock to recover. So that's the best news. Second best news is beat and raise. Now we got a beat, but not a raise. So ideally, you don't do it. But let me show you why I think we should do this one. And it's because of moving averages. Okay, so here's what the stock was looking like yesterday at 4 p.m. It was trading just above 110. And currently, it's up around 110, 112. So now that actually is lower than it was about an hour ago. So the markets are open. Let's see where it opens up here. Excuse me. And let's see. Let me repaint this here. There it is. You can barely see it. It's up at 126.90. So I got to move fast. Now, they did not lift future guidance, but I have this 200-day average here, which is really strong. And I'm going to try to put my line in the sand down here at 105. And given the stock's at 127, I doubt we're going to be able to get anything. But if there's a chance, it's now right at the market open. It's still 9:30 Eastern. We might be able to get lucky on this and get a fill. I'm going to be in the simulated trading account in Thinkorswim, and I want to sell the March 7 105 puts, and then I'm going to buy the 104s beneath. What is this? This is a credit spread. This is a credit spread, and I'll talk about how you can learn about them in the guide here in a few minutes. Now, the minimum credit on these is 10% of the spread width. So the spread width is $1. $1. 10% of $1 is my minimum. I'm going to put that in here for 10 cents. And I like to use GTCs to enter. That sometimes helps get a fill. And let's just put a hook in the water. I can already tell that the options market is not quite open yet because it's still showing yesterday's price. So we sometimes the option market opens a minute or two or three after the open of the market. All right, so our hook is in the water. Let me show you the trade here. This is exactly what I just did. SHAK, S-H-A-K is the symbol. You want to sell to open the SHAK March 7, 105 put. That's our line in the sand. That corresponds to here. So what does that mean? Well, we make money anywhere above 105. Stock goes up, we make money. Stock goes sideways, we gonna make money. Stock can drop and drop and drop and drop and drop. And as long as it doesn't drop below 105, we make money. Up, down, sideways. Great news, lifted future guidance, new stores, 24, 19 plus 28 new stores. And it's just a super duper high probability trade. Now, we may not be able to get it. If we can't, then I'm going to start investigating moving the line in the sand a little higher. So, but we want to try here. So back to the trade, just so you can all see it. So you sell to open the March 7 105 put, our line in the sand, and then you buy to open the same stock expiries. The new strike, though, the lower strike is 104. So buy the 104 puts and get at least 10 cents. And we're going to find out in a minute if we can get it. If we can, I'm going to lift it up. I'm going to lift up the line of the sand. And then once you're in, put an order in to buy back the spread for 10% of the credit received. So if you do get 10 cents, you put in a good till canceled order to buy it back for 10% of what you sold it for, 1 cent. 10% of 10 cents is 1 cent. And when that fills, if that fills, you'll lock in 90% of the maximum profit in the trade. 9 cents in this case. And the most important rule is if the stock breaches your line in the sand after you enter, then you close it down and manage your risk. Manage your risk. Let the winners take care of themselves. All right, Ryan, let's go take a look. How we doing here? Yeah, it's only 5 cents. Okay, that's kind of what I expected. I'm only seeing 5 cents. Let's do a couple of things. Number one, if you look at the expiration date granularity, you'll see we have weekly options. I'm trying to get a 2-week option, a 15-day trade, and they're not going to give me enough money. It's only worth 5 cents. So I sometimes consider moving out another week. So we can make it a 3-week trade, not as short term. And by doing that, I'm selling more time value, and sometimes you can get more credit, and I can see indeed that I don't. All right. So now the only option I have is to consider lifting up the line in the sand. Now, follow this line here. 110, that's a round number. Look left, resistance. Let me go to 115. Look left, and you see support, 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 resistance. Try 120. 120, support, resistance, and support on either line, resistance. And then you can try 125. And you're going to see this. This is a really cool thing about support and resistance. Look at that, 125. Look left, ba-boom, support, support, resistance. So these lines are really our best friend. So know that, and if the stock drops, it's going to have to drop below 125 support, and then 120 support, and then 115 support, and then 110 support, and then the 200-day average, and then it gets to 105. They're like levels of protection. So now that I know I can't get any premium down here at 105, then I'm going to come up. May I please have 10% for 110? Let me try 110. And I'm just going to take a look here and see how close I can get. If I sold the 110s, there's no credit. What about the 115s? Yeah, there's the slippage is still wide. 110. Let's try 110. Let's just try it. Now, mid price is 5 cents. So I'm just using the option chain to figure out how close I need to get. 112, 111. Nope. 112, probably not. Let's look at 115. That's where we're going to do it. 115, that's right here. That's right there, 115. Look left, support, 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 resistance. That's a good level. Let's see if we can get it. I'm going to sell 5 of them, 115, 114. And let's try for 15 cents. Maybe we get that. And I'm going to, actually the price is rising here. Let's take a look at the stock. It's coming down a little bit. So far, it doesn't want to go below 125 support. Look left, ba-boom. It's above the 200 currently, finding support at 125 and the 50-day average. Let me show you that real quick here. The 50-day average is this red line. So far, it doesn't seem to want to drop below that. All right, well, let's try for 115. I'm showing a 15-cent credit. Perfect, perfect, perfect. Confirm and send. Let's see if we can get 15 cents on this. Showing 12 currently. All right, I'm going to drop it a little bit. We got to move a little fast here because we got it. Ryan, we got it for 15 cents. Woohoo! You can see it right here. So we sold the 115 put for $2.50. We bought the 114 put for $2.35. That's a net credit of 15. Here's the trade in a nice little spreadsheet form. All right, and we got 15 cents. Lovely. Okay, so here's the exact order that just got filled in a simulated trading account. Sell to open, SHAK is a symbol, March 7, 115 put, buy the 114 underneath. Try to get 15 cents. You can take 10, but 15 I just got. So hopefully you can get that as well. And then the way you manage this trade, risk first. If the stock closes less than 115, which corresponds to our short put, our line in the sand, which is right here, the stock closes below there, take it off. Take it off, manage your risk. You'll lose less than if you let the whole thing expire for max loss. You got to maintain that risk management like with a vengeance. Number one. And then put an order in to buy the spread back for 10% of the original credit received. And I've rounded that up to 2 cents in this case. You can do, I'd say 2 cents on that. 1 cent, 2 cent, be a little more conservative. Put a GTC order in, good till cancel order, to buy the spread back for 2 cents. Shake Shack. All right, Ryan, that's a good trade, brother. It's either going to win or not, but our statistics are pretty good. I think that's going to be a winner.
Nice.
Might not be though. Always that's a possibility.
James said he got 10 cents on SHAK for 28 Feb at negative 115 / positive 114. Closer to the heat.
Nice. Yeah, I think that's Jim Baker. Well, I didn't mean to mention your last name, Jim. Sorry. Jim's in my sniper community, and he's making it rain.
Yeah, he's got it on his YouTube name, so it's okay.
All right. Good. Well, Ryan, let's look at a couple others if we have any.
We got Jim left us 4 of them. One of them was Shake Shack. The other one, BAX.
BAX. Baxter, I think, right? Baxter International. Bax. Nice. So something happened, gapped up, probably because of earnings. We like to use news in this. That's finding either really good news or bad is part of the system. It helps us to increase our probability. And so what you can do is, you just got to find some news. You can go to finance.yahoo.com. You can go to your broker's site. You can go in a lot of different directions to find news. Yahoo Finance is pretty good encapsulations of the news. So Baxter shares rally as Q4 earnings top estimates. Boop, boop. They beat their on sales. Stock soars. Let's see what else. Now, I'm as I look through the news, usually if the company increases guidance, raises future guidance, you'll see it in the headlines. And that's what I was just looking for, and I didn't see it. Okay? So I'm going to be a little more cautious then with my lines in the sand. All right? And Jim, if you have a short strike you're looking at, let us know. I'd like to see what you're looking at. But you know what? I like 30 on this. All right, so look at this 30 level. Look left, support, resistance, resistance, resistance. At 30 exactly. What? What a gift. What a gift support resistance is for us. So I like 30. And for you to get into trouble, the stock's going to have to come below 32. Look left, support, resistance right in there. And then you got 31. Look left. Support, resistance, resistance. Support breach, resistance. So 31 is as close as I would get, Jim, but I like 30. If you can get something at 30, to me that would be a really, really good trade. Thanks, Jim. I like that one.
All right.
Any others?
2 more. Got Walmart, WMT.
Walmart. Okay. Well, I happen to have been looking at this one earlier. And Walmart here, all-time high territory. I don't normally like to sell a credit spread above all-time highs. So all-time highs right around here. So we could start thinking about selling there. So I don't generally like to go bearish on a stock that's been incredibly bullish. So, but let's investigate a bit and let's see what happened. Walmart. Let us see here. Walmart stock tanks 8% after it warns 2025 won't be as gangbusters as 2024. Sounds like it's still going to be good. Walmart stock falls after earnings beat. What is dragging it down and other retailers low? So a lot of retailers are saying that we're going to hit a cold spot. And Walmart, one of the biggest retailers in the world, We even have one down here in Costa Rica. That's how prolific Walmart is. Solid growth. So the news is mixed. Sales miss sparks fears over fading consumer confidence. All right, so the stock's down. It's kind of like a good reason to take some profits after the stocks hit all-time highs. So I'm a little bit nervous about it. What I would do on this one, if you're really compelled, is see if you can get anything up here at 110, maybe 107. 105 would be the absolute closest, but to me, it's too close. I'd like 110 on this one. If you can get enough credit, Jim, or whoever put that up, I think that would be a decent trade. You can come down a little bit by a penny at a time, or a dollar at a time, but no closer than 105. So that's a decent one too. Any more, brother?
Very nice. Got one last one. Alibaba, BABA.
Alibaba, Chinese online retailer, cheap stuff. A lot of, whoa. I was also looking at this one today, and Baba obviously has been in a very, very bullish trend. I like to look left, and I see some support resistance here. This is the issue with these is when the stock right there. So that would be, let's see, roughly 150. Let's call it 117, 118. So we'll call it 117 actually. So if you look at this at 117, that was resistance over here. It was breached here. Resistance was breached even before the earnings announcement. And the volume was really high. So the chances of the stock dropping below this level are reduced, especially coupled with their earnings. The stock should remain above that point. I'd say the closest I'd want to get on this one, though, would be 120. That's a really nice level. Look at that hammer. Let me zoom in here. Look at this hammer pattern right here. Looks like Thor's hammer. It's a candlestick pattern. And the low of the day was right on 120, just above it. And then it bounced. And then it kept on going like a slingshot. Boom. That's how I think of hammers. And the stock's above 140. So I like it at 120. You could consider, I wouldn't do it. But I would say if you went to 130, that would be the absolute closest I would even think about going on this. Maybe 125. Actually, let me recant that. 125 is as close as I would go. Why is that? Well, you can see here, support. That's right at 125. Yeah, 125. That would be a good level, but I like 120 better. See if you can get something decent at 120, and to me, that would be a real nice trade. Now remember, though, Alibaba is a Chinese company. Trump is in a trade war with China. Who knows what could happen? So you got to be really careful on Chinese companies. We get 25% tariffs going both ways. Good God. It could be catastrophic. So be careful on Chinese companies like Alibaba. Ryan, I love this stuff, and I could keep going, but I gotta move on to other things. Sorry about that. I shouldn't do that. But let's take a look at the guide. Let's take a look at the guidebook, because I want to leave you with this. This is a guidebook that is absolutely free, costs no money. It's $0. You can get it for free by clicking the link below here. And I've been doing this I've been trading since 98 full time, and I've been teaching for about 25 years now. And I've always been on the lookout for systems trading that works, number one, and can be learned by the novice trader. Now, the only fly in the ointment for us is these credit spreads. So you need a little education, and this is free. It's a sniper guidebook. It lots of pictures in it, lots of graphics, and it walks you through the 5 steps of sniping high probability short-term profits. And indeed, it does get into the world of credit spreads, how to build them, how they work, and then how to manage them, most importantly. And it's right there in a guidebook. So the invitation for you is to grab the guidebook. You just click the link. We're going to ask for your email address, and we'll email it to you. And then you can read the guidebook and join Ryan and I every Thursday morning at 9:15 Eastern, where we snipe, where since the beginning of last year, we've been operating at a 92% win rate and the average profit over 11% with an average hold time of 5 days. Get on base, get on base, get on base. It's a trading system that's very much like the movie Moneyball. All right, Ryan, that's a wrap for today, man. Have a good weekend, everybody, and we will see you next week. Same bad time, same bad channel. Bye, everybody.